Are you guys able to unmute yourselves? Great,
Hello.
Hello.
great, great. All right, here we go. So it's important that you acknowledge that um, you're not being given individualized financial advice and that you are doing this of your own volition. All right. So you agree that you are responsible 100% for the analysis and trades. You agree that you have proven that your trades generate positive outcomes through simulation. You agree that you are 100% comfortable. You agree that you understand all of the nuances of each trade setup that you like. You agree that you understand all about the financial reports and the impact that they can have on a trade. You agree and understand that you're not receiving any financial advice of any kind. We're talking about the software, the strategy, and the system. And you agree that you understand that the software that you have is not telling you what to do. It's just a tool that you're using to analyze. And so, if you have not put that in the that you have read and you understand, I see Ricky has done it, Tariq has done it, Dennis has done it, Joey has done it. All right, who else is on here besides those gentlemen? Let's see. Oh, Cam, we need you to do it. Curtis and Elise, we need you to do that as well. And then we'll zoom right to our forecast after we get all of. Okay, got it.
Elise and Curtis just came in.
Okay. Good morning, Elise. Good morning, Curtis.
Good
Go
morning.
ahead and hey, go ahead and acknowledge that you have read and you understand this disclaimer. Thank you much. All right. Day looks like it's a supply day here. Let's get our point of control here. London High, London Low here. The market structure here. When we get there, we need to pay attention. We may not get there today, though. So, you're looking for in this room, you want to recognize probability, you want to recognize the market structure, and recognize momentum for the highest probability and the lowest risk trades. There is no such thing as a risk-free trade. But you want to define, determine, and mitigate risk as much as possible. And the way we do that, according to our software system and strategy, is that we make sure that we understand probability, understand market structure probability. We find that on probability. We find that on our macro chart, MAC. All right, and we find this on our five, the structure, and we find the momentum as well on our five. All right, so we know that that's what we're looking for in terms of a quick reminder of recognition. So you already have your own, your trade setups. You already know all of those. You already know how to manage from your junior class and exit from your junior class as well. So uh, this is the senior information that you need to put on top of what you already know. Probability, market structure, momentum. All right, we got 1 minute before the open. Does anybody have any questions? You know that this opening period of high volatility, and it is a high risk trading period. Um, News to make sure what we got going on. There's some news that none of it is red, no hair on fire news, but we do know that anything that deals with the U.S. dollar, um, we have to understand that it does, sometimes impact what we do, but nothing is happening right now. So this period here, have any questions, you're welcome to ask those questions. Everybody is working in this early period in the bingo. Please put it in. Remember, this is a supply day. Uh, we're going up to kind of retest that supply area. Still bingo. All right, Ricky. Bingo. Bingo. I hear you. I hear you. I love it. I love it. Another bingo. I see another bingo. So in this period, you're just working trade setups. Um, if you don't have any information, you don't have momentum confirmation, you don't have any of that. So with these trades, going based on our strategy, you kind of just, scalp these um, because of because of the nature and the time frame you're working in. Came down to the London low and we bounced off of that. As you can see, while we make sure that we understand the structures. See you, babe. I see Rick. I did three trades, two trades at 8:42 a.m. short, one at 8:30 a.m. long, $1,485. It was in the NQ. That's what I'm talking about. Do your thing. Do your thing. see the power of those structures, why you have to see those structures and make sure that you don't just to work through that. And so here when we talk about evaluation, trading against direction is one thing, trading against an area long or trading against resistance short into support. So those structures can those structures can be what support or they can be resistance depending on where they are, right? And so we know when we get to those structures, basically that's a pause for the cause because like you see what happens there. But you see, you were able to trade down to it. But once you got to it, then that's when you have to bite. Hold up. According to our strategy, in our strategy, even starting from your freshman class, you have to know what stuff is, and you don't try to trade through stuff. 3 minutes before 9 o'clock, and the period is going to change at that point. But as you know, keep in mind, and you see how this market is staying balanced, if you will. So that means you know that this is going to be a structure when you get to it. That's fair value. You see the reaction and response. And so in a structure, you know that there's a price action phenomenon that happens around the break retest bounce, rejection, or manipulation. So that's manipulation right in there. When the cross came right back across, so you recognize that from your studies. Notice on today, as we begin to look, we see that we have a cluster here. A cluster is when uh, all of the uh, all of the ropes are crossed, crisscrossed, mismatched, mixed matched, not in a sequence. You see that? So there's no momentum um, at this time. It appears we have directional bias, you know, a little bit in terms of the fact that we know that this is an area where mitigation may take place in terms of going that direction, but there's no momentum in that direction. So you don't have that confirmation of momentum based on our strategy. So on that, so from a forecasting standpoint, we did get a close beneath, of course, the point of control on a supply day. But as you can see, the wick on the top is just as long as the wick on the bottom. So this is a day where there is no momentum in each direction. So be aware of that. A cluster may break up after we, disperse from, live tech. I don't know, but you do know that you know how to confirm momentum by those three objectives we look for. And at this time, we just don't have it in either direction. There's a cluster. And so don't be afraid to go, to sleep with the same money that you woke up with. That's in terms of understanding high probability. You know, we'll be interested to see what kind of close we get in the next 3 minutes uh, on the momentum chart, which is our five. Interesting to see that. So how price manipulated this edge and stayed in. Here didn't even get to that edge and stayed in. There's no, according to our strategy, there's no momentum or direction at this time. So one of the things that we try to avoid doing is, of course, trading against direction. We try to avoid that trading against direction, and we definitely try to avoid trading into stuff. Okay, and as we look at this particular time, we 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 don't have a direction. That this market is all over the place. It's a supply day, but we don't have any direction now based on our strategy because we don't have the market structure. All right. So when we talk about market structure, what are we talking about? Talk about market structure. Market structure is when the market is making a higher high and a higher low. Okay. So this is a low. This is a higher low. This is an even higher low. This is a high, and this is an even higher high. This is market structure. And often when the market has structure to it, then it'll create momentum because it's actually making higher highs and higher lows. So look at this. You have a long candle here going this way, and so you have a price board or a price vacuum. So later on, as we may perhaps as we leave, if it doesn't happen, it's still a good another 20 minutes left. But maybe they get up there and close this void on their way to mitigating this point of control here. You see, so you have red, white, and blue. The cluster is trying to break up and it's trying to create something. But here is a high, a low, a high, a lower low, a lower low. All right, a high, a lower low. And so right in here, it got into consolidation, as you can see. It's not going either direction. So then it came up and made a higher high here, but this low is still here. So there's no higher high or higher low. So in terms of structure, when we talk about structure, there isn't any. This is a range right in here, right? So will they go to the top of this range? I don't know. But when we look here, we see we don't have momentum in that direction. But we have a trading idea that it perhaps can go this direction because as the market was making this trend down in here, it was making this trend, it start making higher highs and start breaking it. So the idea is that there has been a reversal, but there has been no confirmation on the momentum because that's what we see. So that's the real time dynamic analysis of what we have. There's an idea that we're going this way. The market made a different high, but it didn't make a higher low. So as we get in this trend, we get a high, but we don't get a higher low because this low is almost even unless you just count that two right in there. So there's an idea that that's the way, but there's no momentum in that direction. Uh, this candle still closed red. This candle still closed red. We haven't had a green close after this one yet. And we still are upside down here. So there's no momentum going that way. So if it does go this way, it'll be pure price action. So it creates a mid risk, if you will. Will it break through that? That's the question that we need the institutional leadership to answer. You see how when you have a cluster, you don't have a clear direction. See, that's see, this is divergence. You see, the space between, and this is nothing. According to our strategy, this is called a rejection. See, we got down to that structure. There was a rejection. There was no manipulation. One or three things always happen as structures. So in this case, this was a rejection. Here at this structure, this was what we call manipulation. As well here. If you took these trades, you're taking they're mid risk because you don't have confirmation. I have 9 more minutes in this period. So today, let's see something. What could be causing lack of momentum? Let's try to find out. 9:30 a.m. Okay, so there's something that's going to be said about natural gas. So people could be holding their money, waiting to hear whatever this is going to say or be. Ah, uh-huh. The FOMC member Brainerd speaks. People are definitely waiting to hear when you see FOMC, okay, and then someone else is going to speak. Anytime you hear FOMC or non-farm payroll, whatever those people say affect indices. That is what we're doing. That's what most are doing. Commodities would be crude oil. Indices would be the Nasdaq, NQ, of course, our derivative, or um, the Dow, YM, things of that nature. Bingo 56. I see you, Joe. We have 7 more minutes in this. So it took some price and information risk. I hear you. So did Ricky, took both price and information risk. All right. Back in right here. There's a void right in here, in that area. Who don't understand that, they just got hurt right there. Uh, in the strategy, layups are tight. So that your capital preservation stop loss can be tight. Always have to remember what you learned in your junior class, your risk to run ratio, understanding what percentage of your account you're putting at risk. No. And in our strategy, we know we don't have momentum when we have a cluster and when you see candles trading side by side like this. So, so you got so we look for reasons to enter the market, but we also look for reasons not to enter, right? All right. So some of the reasons I don't enter market sometimes because the candles are trading side by side. This histogram is saying down. This lead line is saying down, but the candle is green saying up. But we also have supply signals. You see these long wicks slash sticks. You see those? You see how long that is? You see how long this is? On every one of these candles, there is a supply signal. Supply signal on every one of them. So I don't care how fast they move these candles or how they pump these candles. When you're reading the software, reading the system, and following the strategy in terms of high probability trades, this is not that environment. It's not no probability. It's just not high probability. It's mid risk. So I don't know if the persons who bingoed, I don't know if they drop down in terms of their position sizes to negate or to mitigate the risk. But whenever there's risk mitigation, it's really wise. So if you normally trade 10, mitigation may say you trade one. I normally trade three, mitigation may say I trade one. I normally trade five, mitigation says I trade one. That okay, I understand the environment that I'm about to enter in. So the way I'm going to mitigate that risk is that if I am stopped out, it won't hurt me. And if you say, well, if a person was to say, okay, well, I don't have any to lose, period, well, then that means you would probably go to bed tonight with the same amount that you have because this is not a high probable environment based on our system, strategy, and software. Tuesday was, Wednesday was, but today just happens not to be. So this is where, how real traders stay in the game by mitigating and negating risk and negating the avoiding. See, the last two strips have been red. It's just not confirming a direction. That's just the bottom line. It just is what it is. You see, it's bouncing between fair value and this London law, basically. Couple manipulations long, but it has not been able to break, retest, and bounce this area. So basically, later on, um, after lunch, they may break this cluster up, but based on what I was showing you, I can see why this that it's like this. It makes sense because like whatever these people say, whatever they say, you know, I say, well, do we need to know what they say? Whatever they say is gonna affect in some kind of way. Whatever they say, it doesn't matter. And so because of that, um, some people sit on their hands and they don't put their money at risk until they feel that there is going to be a confirmed direction. So we listen to them from a fundamental standpoint of what they're saying, and then we come fact check it based on the technicals that we see. That's what we are. We're not fundamental analysts. That's why we're not trying to figure out what they're talking about. We're technical analysts. They're going to show us. The chart is going to show us what they said. That is going to show us. So maybe 1 o'clock you come back and you get momentum one way or the other based on what was said. You know. Uh, but this market could not be more sideways. It couldn't be more sideways. It couldn't be more sideways. One, two, three, four, five, six, seven, eight. Eight candles. 8 times 5 is what? That 40 minutes, right? Like for 40 minutes, like this is what this market has been doing. So, but we always, um, you know, look at 100 between 180 and 200 days because there will be days like this. It's just how it works. gentleman that's going to speak today, his name is Brainerd. As we look at, see here, um, FOMC member Brainerd speaks, right? So he speaks a lot, and when he does, it affects that market. So this is what he said in November 2022. This is what he said in September. This is what he said. This is him speaking in October, and 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 every time the Fed speaks, they are talking about interest rates and whether or not they're gonna raise them or not. And that affects how people um, invest in the market, if you will. Concerning the dollar, right? Which is indices. That's what we do. So that's why it's important, and that's why you see the sideways action, because most people with money, you see, there's not a lot of money in this market today. Um, there are not any, no, no real. Even these candles were small. That's not that volume. So the bigger the candles, the bigger the spread. And you see how all the spreads are tight. All of them are tight. All of them are tight. Even when it was moving, it was tight. So you had this power move here, and then you had this to go back and mitigate that, and then bam, we went sideways. So for tomorrow, it may be wide open, up or down. It depends on how people respond and react to what the gentleman is going to say. Are there any questions, any concerns, any critiques, any criticisms, anything you're curious about? One trade with 11.5% growth is a great day. It is. It is. It is. Wow, that's good. All right. All right. If there are no questions or concerns, you know your rules. You're looking for momentum. You know that, and this is not it. So those of you who are going to come back after lunch or what have you, they might break this thing, whatever that man says, they might break this thing, and then it gets wide open, the spreads get wider, the ropes roll over, and you got red candles going down, and you got everything that you're looking for. So we don't know, because I don't have a crystal ball. I don't have a clue of what people are going to do. But what we're going to do is watch them, if you will. If that's your trading style, if you have a trading style I'm conservative, this is my window. And if I get a trade in my window, I take it. If I don't get in my window, I wait until tomorrow. If that's your style, that's great. That's great. If your style is to look later and mitigate, that's great. But when you move outside of this period, is a mid risk. This is the low risk period, and the market just didn't move today. All right. Any questions, any concerns? I pray to God that this is helping you in terms of your patience, your discipline, and your overall understanding of how the market works. God bless you. Reach out to me if you need me, or any of our instructors or anybody if you need us. God bless you. Have a wonderful day. Bye-bye.
Thanks, Neil.